Alright, welcome back. You're watching for take a complete detour and let me know also introduce and welcome R. Venkatraman, Executive Director with IIFL. He joins us live now. Venkat, good morning. Thank you for joining us. If I analyze the quarter gone by for you, even the market conditions are strong. For India and for income is up 58% and PAT is up 12%. Why is that?
Essentially, if you see if you look a bit down in the numbers, then we have multiple business incomes. Earlier, our business was primarily driven by broking, and in this quarter, we have seen broking income up 14% quarter on quarter, but it was down 3.1% on a year-on-year basis, and that is primarily driven by a change in the business mix. Because if you see the business composition in the exchanges, also more and more business happens in the F&O segment where yields are typically lower. The big driver for the earnings for this quarter for us has been the NBFC book, and that was also helped by the fact that we have two big IPOs. The IPO financing business also did well. We had the IPOs of Coal India as well as Power Grid, and that was also a key driver of the earnings growth for this quarter.
Venkat, on the broking side, while F&O volumes have been fairly decent on a sequential basis, cash volumes haven't been all that great. Do you think that's a trend that you may see in the fourth quarter as well?
That's a very interesting point you have made. Actually, if you look at the business mix for the last 8 quarters, I think roughly about 8 quarters around, the business mix for cash and F&O on the broad exchange was roughly about 75 on the F&O and the 25% was on the cash. And now if you see, it is roughly about 91% on the F&O and 9% on the cash segment. So somewhere I think it should bottom out, but it doesn't look like bottoming out. The business mix is heavily skewed towards the F&O. But I take your point. I think maybe in the next quarter or 2 quarters we should see cash volumes picking up.
Now your margins, EBITDA margins for the quarter gone by, they've exploded from 39% to 47%. So what's the real number? 40 plus or 35% plus?
See, I think last quarter we benefited from, as I mentioned earlier also, from the IPOs of Coal India and Power Grid. So if you remove that, I think a long-term sustainable margin should be in the 39-40% range.
So if in the near term you don't see cash volumes picking up, at least in the next quarter, what would it mean for yields and profitability?
See, if you have to break yields segment-wise, I think most people look at the blended yield, and the blended yield is showing a declining trend because of change in the business mix, because everybody knows that yields in the F&O segment is lower. But individual segment-wise, I think we are fairly, we have hit the bottom or so. I think from these levels, if I can use the word, things can only improve.
How's the asset quality looking for the NBFC business at the time and rate environment is changing? NPA, they tend to move up.
See, what has happened for us is that if you look at our book, then roughly about we have an equal mix between capital market exposure and the mortgages. We had unsecured lending some quarters ago, which we have stopped, and we have the book is now just running down. It is and it is fully provided for. So touchwood, we have had a NPAs of less than 1%, and hopefully we have seen one cycle in 2008 when in the liquidity when liquidity in the economy tightened, and that time also touchwood our portfolio held well. So.
What about the market? How much more downside from these levels?
From our view is that the markets are falling because there is a lack of buying conviction, and so volumes are falling down on, I don't think on good volumes. It is compared to the average volumes which we have seen a shrinking of volumes also. So people are they have complete disbelief on the India story, and we think that there is this is some kind of correction, and the long-term macroeconomic scenario for India looks good. So it is just a matter of time when people start coming back.
So in the near term, what's the call then?
In the near term, I think the markets are volatile with a downward bias. So and we have see what is happening at least in the months of February and March. In February, there is a budget. I understand, and I see your channel also. Everybody says that budget is no longer a big quote unquote event, but still it's an event. So and market players tend to look at that. And then you have March 15 when advance tax number comes, and people generally in the month of March are not bothered because everybody is closing their books or closing their portfolios. So and then again we'll have the JFM quarter numbers. So I would say a big variable for the markets, and that will be a key determinant of how the markets behave in the next quarter, which is starting from April, will be 2 things, which is earnings, actual earnings which come through in the January quarter, as well as what's happened to interest rates. As of now, we are seeing interest rate tightening, and if you talk to anybody, nobody thinks that it will come down even in April, May, which is traditionally the slack season. So if interest rates remains the way they are, then we'll have a problem.
10 seconds before we wrap, one money making idea, and I'll keep it open, large cap, mid cap.
I think we would say the banks are beaten down. So if you have a 1 year perspective, the bank should do it.
Give us one name.
Huh?
Give us one name.
I think HDFC Bank, Axis Bank, ICICI Bank, all the private sector banks.
You're saying the obvious names now. Shows the merit of a hidden research.
So banks are looking good. We have a buyout on Axis Bank, HDFC Bank. So.
Okay, Venkat, good to have you on ET Now. Thank you for
Thank you very much.
Girish, what is your view on NBFCs?
Break. When we come back, lots more market talk.